Support for this podcast is provided by the University of California Irvine School of Law Graduate Tax Program. Are you an employer looking to interview some of the best tax talent at the top law schools in the country? If so, then you'll want to check out the Tax Attorney Recruiting Event, or TARE, the largest event of its kind. The event is being held virtually on Thursday, February 24th, 2022, and brings together more than 150 graduate students from the LLM in Taxation programs at Boston University School of Law, the University of Florida Levin College of Law, Northwestern Pritzker School of Law, and University of California Irvine School of Law. Participating employers will have the opportunity to pre-screen applications and select candidates with whom they wish to interview. Employers may participate by interviewing students virtually during TARE or by collecting resumes from participating students. Don't miss out on this unique opportunity. Go to the-tare.com and click on the employer registration link. That's the-tare.com.
Welcome to Tax Notes Talk, a podcast from Tax Notes, the leading source of tax news, information, and analysis.
Welcome to the podcast. I'm David Stewart, Editor-in-Chief of Tax Notes Today International. This week, changing voice. For nearly a decade, Will Morris has been a leading advocate for the business community on tax matters at the OECD. As chair of the Tax Committee for Business at OECD, he has participated in what might have been the most active period of work on international tax in history. He recently stepped down from that role and spoke with Tax Notes chief correspondent Stephanie Sung Johnson about his experience. Stephanie, welcome back to the podcast.
Thanks. Great to be here, as always.
So first off, could you tell us what is Business at OECD?
Business at OECD is an independent group of multinationals. They basically speak for the international business community and is made up of several member organizations, like the U.S. Council for International Business, the Confederation of British Industry, Kidandran in Japan. So BIAC is basically the one organization that synthesizes all of these business groups' positions on certain matters, policy matters, any kind of issue that the OECD works on. They advise the OECD independently on issues including tax.
All right, so could you tell us a bit about Will and what you talked about?
Sure. Will became the chair of the Business at OECD Tax Committee in November 2012. That was right before the BEPS project at the OECD really took off. So he's really been in the driver's seat in terms of steering what business's position has been on the BEPS project and other big international tax initiatives like tax transparency and all those other things. But mostly, most of our conversation centered on the BEPS project and the two-pillar BEPS follow-up project. I think it was a very fascinating interview, and I was glad to have him in the studio. He's actually our first in-person podcast interview since the pandemic started, so that's kind of interesting and fun.
Well, all right. Sounds great. Let's go to that interview.
Thanks, Will, for coming by and speaking to us today about your tenure at the BIAC chair of the Tax Committee. You've been chair of BIAC since 2012, and you've just stepped down. And just wanted to find out more about your time there.
Stephanie, it's a pleasure to be here. It's actually a pleasure to see you in person. One of the things about the pandemic is just that, the video calls are great, but actually being here in a podcast studio with somebody is actually just a whole step above that. So thank you very much for inviting me.
Absolutely.
So yeah, BIAC, or Business at OECD, as I'm officially meant to call it, I've done it for 9 years, and that is quite long enough. I was actually invited to do it, or I started, in November of 2012, which actually was the very month that the British, German, and French finance ministers wrote to, I think, the G20 to say, hey, we need to step up against this aggressive tax avoidance, which was the genesis the next year of the BEPS project. And obviously the BEPS project begat the project that we're currently looking at, whatever exactly we call it, the digitalization of the economy.
Definitely not BEPS 2.0 though, right?
No, it isn't. we can get onto that, but it is not BEPS 2.0, whatever else it is. So, I've had the enormous privilege of this ringside seat. And, there are huge advantages to sitting next to the ring. Occasionally, things fall out of the ring at you as well, for 9 years. And, I stayed on, honestly, a little longer than I thought I was going to, and probably a little beyond my term, in order to see out the digital project. At a certain point, I said, okay, I think we need to move this on. It needs new blood. I'm going to stay involved in BIAC for at least another 2 years on the Bureau, and probably quite involved in the digital project. But Alan McLean, who's the head of tax at Shell, who has himself a long history with BIAC, is taking over, and he'll do a great job. And I'm looking forward to working with him in that role.
So your job as a chair of BIAC, it involves a lot of stakeholder views, a lot of distilling of views into one position, a lot of coordination, a lot of keeping people happy. You're leaving at a critical juncture at this project here. So how do you feel about that? And where do you hope it goes from here?
Right. One of the aspects of it that I've loved is BIAC is, as you hinted, a confederation of actually other confederations. So USCIB, United States Council for International Business, is the US member. CBI is the UK member, the Confederation of British Industry. MEDEF from France, BDI from Germany, Kaidanren from Japan. And, all of those have actually quite a big impact in the formulation of BIAC positions. And, I don't know, maybe 50 years ago I'd have become a diplomat, maybe not. But I actually quite like sort of trying to pull people to a common position on this. And, we operate on consensus. Consensus doesn't mean 100%. Consensus generally means somewhere around 97, 98%. So no one person, can veto absolutely everything. But, obviously we try to accommodate those. And one of the interesting things is both during BEPS and during this project, despite the fact it's been very contentious and despite the fact that there are actually very wide and differing industry perspectives on both Pillar 1 and Pillar 2, we have been able, for the most part, to send in consensus comments. That sometimes means that they're at a slightly higher level than some people would like. But again, it's important to say, actually, business does care about this. And to stop this being about, one sector being against another sector. And there's always going to be some of that. But it's also interesting trying to sort of explain one country's position to another country's position. And, I'm simply because of, where I started off, where I am now, the various jobs I've done, acting as that type of bridge is something that I find really quite attractive. So, to give a very up-to-date example, on Pillar 2, there are lots of US businesses who, for good reasons, believe that there are aspects of Pillar 2 which could well be much more generous than guilty, particularly if guilty gets changed. At the same time, there are lots of European businesses, and obviously they're thinking about Pillar 2 more than some other countries because of the likelihood of the EU moving forward. They think that guilty could end up being much more generous than Pillar 2. So, saying to each other, well, actually, here's what the other thinks, and here's why they think it. And actually, now, how do we think ourselves into a position where we have something which is common on Pillar 2? Again, it's just, it's been a really interesting challenge. And I've loved working with people from lots of different countries. I mean, obviously, prior to the pandemic, I went to Japan, I went to Korea, I went to Australia, South America, North America, Europe, Russia, all sorts of places, not all of them OECD members, to talk about this and to try and sort of make the process roll forward. And that was, to be sure, much easier before the pandemic than during the pandemic. But even during the pandemic, we've tried to keep things going. It's more difficult. And, I was delighted, thrilled, actually, that we did actually manage to have an in-person BIAC meeting in Paris at the OECD, apparently the first outside group at the OECD since February of 2020. Because in a sense, there's nothing natural about this grouping. It's not like, a bunch of old college friends or a sports team or something like that. BIAC is a group which doesn't work unless people get together and talk. And while we've held that together, on video calls, actually getting people in the room is what's absolutely critical so that they can exchange views and so that you can have those, offline conversations. And I think for all that we talk about the changing workplace and the importance of people being able to be virtual and to be flexible, if we lose the in-person element completely, we're going to lose a huge amount, I think. When I was at the Treasury 25 years ago, I worked for Don Lubick, who is still an amazing guy, but he was a great guy. And he used to say, look, he said there are two ways of negotiating this. He said you can start with the first big point, get really stuck on that, and then, that's it, basically. Or he said, you can start and find the things you agree with. The things you don't agree with, just set them aside. And he said, at some point, if you agree on enough of the small things, it'll make the big things easier to agree on. And he was right. And, I've followed that advice. It doesn't always work. Sometimes there are just some things where you can't get over the hump. But actually, if you try and find out what the common points are, which is, whatever process you're dealing with, then actually you can quite often get to that consensus. And that's a better place to be than, sort of everybody standing on their rights and getting all angry and not working things out.
Yeah, it seems to me that strategy has helped get us to this point because for a long time, I think a lot of civil society, a lot of other stakeholders were saying, well, if business doesn't want change, but you came in and said, I remember you saying this at a consultation, we understand that change is coming. We just want to be part of it. We want to be engaged. So that is a sea change, I thought.
Yeah, I'm not sure everybody believes it, just to be clear. I think because, there are justice delayed is justice denied. And, again, I understand that some people, felt with the very lengthy OECD projects, although they produced, brilliant stuff at the end, that those took too long. And I think that people, also when business says, they say, you always complain about that. And you think, well, one of the reasons why we always complain about it is because it would always hurt. So that's why we complain about it. But at the same time, I think we as business, and this is where I have pushed very gently, is we have to acknowledge that things are not the way they were 20 years ago. They're not the way they were 10 years ago. And it's a series of things. It's partly globalization, which has changed people's perception of the way business operates. It's also changed the way the business operates. Digitalization as well. Underlying both of those are concerns about jobs and about job security. Both of those have also led to, sort of this K-shaped widening between, those who are successful and those who aren't. And that's both as individuals and as businesses. Governments talk to each other more. Obviously, the advent of social media has changed an awful amount. It hasn't changed the technical stuff. It hasn't changed the need to write law well. It hasn't changed underlying economics in the way that globalization has, for example. But it has changed people's methods of communicating and probably even more importantly, people's perceptions. And business needs to lean into that. I mean, it needs to lean into it for a couple of reasons. Firstly, because, actually, if you're not on the same page or working along the same lines as your customers, your suppliers, and actually, very importantly, your employees, then things aren't going to go right. But also because, society works better if everything is integrated. And, one of the things that we have seen is, I don't know, it's a slightly posh term, pompous term probably, sort of asynchronous development. And to try and pull things back into each other. And, this is not to say that everybody needs to immediately move to the broadest possible definition of what constitutes a stakeholder society. But I think at the same time for business to say, just, get out of our way and let us do our thing. Well, no, that's not how people are working anymore. It's not how governments are working. And, to be sure, I mean, I fervently believe, as I can't put this too strongly, that the private sector has a huge role to play in creating growth, in creating jobs, in giving people, dignity, essentially. And that's a really important thing. But at the same time, we need to rethink how we can integrate some of these things. And the OECD has moved in that direction to some extent. And, I think business has as well.
Support for this podcast is provided by the University of California Irvine School of Law Graduate Tax Program. Ranked number 1 on the West Coast and number 5 nationwide, this innovative program prepares students to practice tax law at the highest level in the U.S. and abroad. Featuring a low student-to-faculty ratio, cutting-edge technology instruction, and dedicated career support, UCI's graduate tax program helps prepare students for a future in tax law. Program graduates are placed in top tax-related industries, practicing law in many major U.S. cities. Applications are open now. For more information and to apply to this highly selective program, visit law.uci.edu/gradtax. That's law.uci.edu/gradtax.
So you kind of talked a little bit about, when you first started as chair of the tax committee at BIAC, that project was just getting started. Mm-hmm. How did that process compare to, it's the consultation process with OECD compared to now? I know I wanted to ask you about that letter you sent to the Secretariat and to Working Party 11 and to the TFG. So you just talk a little bit about, how the consultation process with business differed now from then.
Yeah. One very important point. The Secretariat was CC'd on that letter. It was to the Task Force on the Digital Economy and Working Party 11. So, look, I mean, both processes were different, and the pandemic has played some part in that. But a number of things. The first is BEPS was a different project and in a different posture to the digital project for a number of reasons. So, BEPS was, in the end, 15 action items, obviously not all of which were consulted on, most of which were. It was split up into those units, identifiably separate, and each of them had government people involved, and we as BIAC split up between those. I mean, I sort of floated over the top of this, but we had subgroups of BIAC which looked at each of the individual projects, and as the consultations rolled forward, got involved in those, did the comment letters. It was a very orderly process. I mean, it was much faster than the previous projects, but each of them was relatively well delineated. And another difference about BEPS was that BEPS was largely a story, at least the narrative, was largely a story of, undertaxed or untaxed income. And, for the countries involved, there weren't winners and losers. There were only winners, which made them, in a sense, a little more relaxed about what the provisions were and a little more prepared, I think, to listen to business, at least on some of the points around how do we make this work, less so on the policy. And that's fine. We've always understood that. So it was a different project. But it was, if you will, cut up into sort of bite-sized chunks and was thus more digestible. And, not everything worked. I mean, if you look at the, I think it was Action 4, if you look at some of the CFC stuff, for example, they never got below really motherhood and apple pie. And on others, however, the anti-hybrid rules, lots of consultation, some of the treaty stuff, obviously, 8 through 10 on transfer pricing, lots of consultation there. And on some of the others, country-by-country reporting. So, it was a process which, for the most part, worked. I mean, did business like everything that came out of it? No. But did business feel listened to? Yes, I think so. Or at least heard. Not always listened to, maybe. But certainly heard. But that part of the process worked well. That was the posture of BEPS. This project has been different, not BEPS 2.0, as you said earlier. This project was firstly an acceleration of what was meant to be a 2020 review of the digital economy part of this, shortly to become the digitalization of the economy, to broaden it out from simply one subsector. And then when the US came along and did TCJA and we had guilty and beat, then those countries who had hankered after a minimum tax thought they had a reason to sort of push that out onto a more global basis. But with Pillar 1, or what became Pillar 1, there are, again, a number of significant differences. I mean, when we were talking about BEPS, through 2015, we were talking about the OECD member states and the G20. What we have had in this project has been the inclusive framework. And, as you know, the inclusive framework, I think, largely grew out of a compromise, I think, from the FFD conference, Funding for Development in Addis Ababa in 2015 or 2016, which was that essentially developing countries had been shut out of the BEPS process. It was still going to be imposed upon them. And that was unsatisfactory. And it was a question, should this go to the UN Tax Committee, should it go to the OECD? The OECD formed the inclusive framework. But, when you have, whether it's 90 countries or now 141, that's a different challenge in terms of getting consensus inside of that group. So that's point number one. Point number two, which is, I said right from the beginning, not always hugely popular, was this is unlike BEPS because, particularly with reallocation, in very general terms, if one country wins, then another country loses. And the winners are always going to be happy. The losers are probably going to be less happy. And, that is the way it's turned out. So what it's meant is that there's had to be a lot more focus, not just from the OECD Secretariat, but from some of the larger countries involved, on getting other countries on board. And that was never an issue in BEPS. Everybody was pretty much on the same page. So it's meant that there's been a lot less time for business in this process because a lot more time has had to be focused on the countries. And that, has impacted the way it's done. The other thing is that because it wasn't broken down into the bite-sized pieces, essentially, October of last year, we get 200-page plus blueprints, which they weren't indigestible. You just had to spend quite a lot of time chewing them before you could digest them. And it meant that, there was a huge consultations. And, then what you do, you have a lot of business comments, 3,000 pages, which is indigestible for the OECD Secretariat. And then you have to go back to the governments, and it all became much more complicated. And then with the beginning of the pandemic, but also some very tight timetables, which, to a certain extent the OECD had set themselves, what got squeezed out of that was comprehensive consultation with business. Obviously much more difficult during the pandemic, although there were, a couple of sort of video consultations, obviously not the same. But what the OECD did instead was to reach out to some individual companies, which, obviously is in one sense a reasonable way of doing it, but it doesn't get that, cross-sectoral, cross-geographic balanced set of views that you would get if you were doing a full consultation and you had, for example, BIAC involved. So to come to the letter, one of the interesting things of this in-person meeting was that I think people felt able in person, at least to me, with me, to be much more angry than they would have been on a Zoom call. And there was genuine anger and frustration at the lack of consultation and at, the position in which we found ourselves. So I said, okay, well, I'll communicate that. And, I'm glad that I did. I think it was important that I did, because I'm not sure that either the Secretariat or, in fact, many of the governments involved understood that. I think that they were so focused on getting agreement amongst themselves. And, the point that the letter made, which is, again, completely genuine, is, look, we understand the policy calls have been made. I mean, there are one or two left to be made. We're not really interested in those. What we are interested in is this stuff is going to happen to us. And we actually have some useful thoughts, information for you on how it can be made to happen better rather than worse. And again, 140 countries involved. In Pillar 2, for example, there's going to be no overarching treaty. Coordinating that is going to be very difficult. You would be better served if you have the views of lots of different businesses from lots of different countries on how this could be made to work better. And that's, that was the offer that was made. And likewise on Pillar 1, apparently some of the discussions on, the surrender jurisdiction, the country which cedes a tax base, in essence. There have been lots of discussions there. It's become terribly theoretical, terribly complicated. And, businesses saying, hey, we sort of understand where you're trying to go, but could we help you design that in a way which actually meshes with business? Because, there are things, I'll switch back to Pillar 2 for a second, but, one of the interesting things is some people were saying, well, look, we're talking about it being effective in 23. We understand those are very short timelines. You're thinking, yes, they're very short timelines. But they said it's really a 24 issue because it's only in 24 that you'll have to pay the tax and do the reporting, do the tax reporting. And you think, can we just explain to you how financial accounting works, how financial reporting works? If this is effective on January 1, 2023, then from January 1, 2023, we are going to have to make provision for the tax. We're going to have to know what the rules are, understand what the rules are, and be able to, build tax accruals or whatever on that basis. Also, at the end of the first quarter of 2023, for many people, we're going to have to do, sort of the first of our financial projections, in public as part of our regulatory reporting. This actually is not a 2024 issue, it's a 2023 issue, but that's when it comes into effect. And even explaining those simple things, and we've had similar conversations about deferred tax accounting, what it is, what it isn't, how elective it is, not very elective as it turns out. Again, it's a process which, if business can be more involved in this, then what is designed to fulfill the policy requirements which governments have decided that's for the governments to do, it'll work much better. Whereas there's the possibility of all sorts of, sort of crossed wires here if this is thought up in a vacuum.
Yeah, providing tax certainty is supposed to be the cornerstone of the project, right? So
it is.
Do you think at some point you will get to tax certainty once the dust is settled? I mean, I think we'll have a few years of a bit of messiness. We'll have some messy rules. We'll have some messy compliance issues. I mean, but eventually will the waters calm?
I hope so. Look, I think there's no doubt that we will have more tax uncertainty before we get more tax certainty. And, the question is, firstly, how quickly can we get there? But the second is the extent to which now we can mitigate that uncertainty. And, there are a number of ways of doing that. One is, yes, to talk to business to try and make the rules simpler rather than more complex, the allocation formulas, all of that type of stuff. The other is also to provide safe harbors, where it's absolutely, if it's relatively clear. I mean, I remember this from 10 plus years ago, working in the UK with the UK government on their foreign tax changes, was that they designed this complex set of rules that they knew were only going to apply to about 5% of the business population. And yet they couldn't think of a way not to have everybody run through all of the rules to get there. And the same is going to be true with Pillar 2, maybe true with aspects of Pillar 1 as well. That, there are going to be most countries where that the effective tax rate isn't going to be below 15%. I mean, it's evident on the face of things. And yet the rules will require you to run through all of that. And you might have footfaults, and there will be opportunities for some governments to assert that, not everything has been followed. Why bother going through that? That just doesn't make sense. I mean, what you're trying to do is to really catch, the income which clearly is not being taxed at 15%. And so, how again can we build in these simplifications? And, one of the problems with the timetable is it looks at least like on Pillar 2, some of the safe harbor stuff is actually going to be next year rather than this year. So, we'll get the rules. We think we'll get the rules this year. But we won't know what the safe harbor is. So again, people will be thinking about that. But again, with more involvement, talking more, just working it through and making sure that, all of the available knowledge is fed in and, business is really ready to feed that stuff in, then I think, will help a little bit.
What has the response been from Working Party 11 and TFDE and the Secretariat to your letter?
We have not spoken directly to the working parties. We've let the Secretariat do that. The response from the Secretariat has been positive. They acknowledge most of what I've said, which is that a lot of time had to be spent getting to the quote-unquote political agreement. And they also acknowledge there's going to have, probably still some more time left on some of the other policy issues. I don't think that they're terribly interested in putting out another 200-page document and getting in 3,000 pages of comments on that. So I think that they're looking for other ways of doing consultation, but I think they really do want business input. And I think that in that sense, I think the letter went at the right time. And, certainly from some of the governments that I've spoken to since then, they too have welcomed that. And interestingly, some smaller governments have welcomed it as well, because they've said, we actually don't understand what's going on. We'd quite like to have a little bit of pause and to hear from business and to do that. So I think we'll get more of that. Now, that's again not to understate the difficulties of the political timetable which have been set before us to get Pillar 2 in legislative form, to get regulations done, to get forms designed, all to be effective in 2023 is a Herculean task. Likewise, to draft a comprehensive treaty which creates new taxing rights and to drive that through a ratification process, including in some countries where the ratification process is not particularly simple. And indeed in other countries where, if they're net losers, then actually maybe the parliament won't be as cooperative as it normally is. So, again, to get that in effect by the beginning of 2023, again, requires some heroic assumptions. So, I think that we'll have to see how that works. But, I'm hopeful that we'll come to a better place on both of these. But, the political timetable has really not, it's created momentum, and I understand that the momentum has been useful in pushing towards a political agreement, which even a year ago would have seemed highly unlikely. But the next step in this is to actually create workable laws, workable regulations, and workable processes for resolving disputes. And that's harder. That can't be done with quite the same flourish. Because once and this is the lawyer in me, I'll freely admit that, but once you have to start putting words down on paper and understanding what the implication of those is and how courts might deal with those, that's a different thing. And that, in some senses, can't be rushed and can't be papered over.
Is there any indication that the timetable can be flexible? Because it seems, given all of these issues that you've raised, it seems that there is no choice but to build in some flexibility.
Well, yes and no. Yes, in the sense that, look, I understand why the timetable was set out the way it is, and I understand why people continue to talk about it. because they're worried that if it begins to slip, then it never stops slipping. And that's a genuine and completely understandable concern. I completely buy that. At a certain stage, however, accepting the obvious, which happened after the beginning of the pandemic, to begin with, the OECD said, nope, the timetable's going to stick. And then eventually the G20 modulated it. So, there is obviously the possibility there. And, already I think the treaty, which was meant to be to be ready at the end of March, in fact, will probably be ready at the end of June. So, but the 2023 effective date, they continue to hold to. Now, there's a danger with that, which is that the politicians say effectively to the policymakers, you promised me. And I, in turn, have promised to the whole wide world. And, not just finance ministers, but presidents and prime ministers have promised us, make it work. And then we have, then there is the terrible possibility that they just do it. And, we have seen European directives in the past which have, come into effect while honestly not being completely ready. But because they've been done, they're fixed. That's the way it is. That would not be a good outcome for Pillar 2 because there is more work which needs to be done on it. So I'm hopeful that they will find a way to say, okay, look, we've agreed the principle. We have the political agreement. The technical stuff is actually proving to be quite hard, but the beginning of 24 is now not that far away. Let's push it to the beginning of 24. That I think would be a good outcome, and that is where I hope we'll end up.
Support for this podcast is provided by the American Bar Association Tax Section. Are you looking to make valuable connections with government officials, academics, and tax professionals? ABA Tax Section membership provides you with opportunities year-round to engage and network in your area of practice. Members receive discounts on meetings, CLE, and publications, and membership also provides you with free, on-demand CLE and special members-only news and updates. Discover how membership can benefit you and join at ambar.org/taxnotes. That's ambar.org/taxnotes.
Changing gears just a little bit. So I've been hearing a lot about this, let's make tax boring again. Let's make it so that companies are not focused so much on tax planning, but on innovation and investment. Is that going to happen in your view?
Well, again, this comes back to the arc of my whole career, but certainly, the arc of time at BIAC. No is the answer. This is a genie which can't be put back in the bottle. There are at least two things which are at play here. The first is a longer term thing. When I started working back in the 80s, tax was really quite boring. It was a compliance function. You didn't have a grand title like, VP of taxes or global director of taxes or anything like that. You were the tax manager, and you were some layers down in the accounting organization. And it was a pure compliance function. What changed on the business side was a realization that actually tax is a manageable cost. Now, we can talk about whether that got pushed far too far. And, a tax department as a profit center, I think is an issue worth discussing. But, nevertheless, tax is, I think has been probably rightly elevated as something which is, an important factor in a company's success. Now, it needs to be balanced with all those other things that we talked about in terms of reintegrating yourself into the society, which surrounds you, being, again, more sensitive to customers, to suppliers, to employees, to all of those stakeholders. But I don't think that part of it is going to go away. I don't think, tax is just going to be relegated to being a compliance function. But the other thing is that governments have been, firstly, more focused on revenue as revenue needs have increased. And, now two substantial economic hits in the past 10, 12, 14 years, both the global financial crisis and now the pandemic, have increased revenue needs while decreasing some revenue streams. And again, that stuff I talked about before in relation to globalization and digitalization. It's not just on the corporate tax side, although it's easiest to sort of visualize that for some governments, but also when you think about the impact on income taxes, social security taxes, other types of taxes. Again, that has changed. But equally, going back to this point about tax, it's just has seeped into the public consciousness as being something important. Again, you can't undo that. So, I'm not sure why people would want tax to be boring, just to be clear, but, I just don't think it's possible because I think that business is in a different place as to how it views tax. And, there's a there's a spectrum in there between how much tax planning do you do, how do you weigh that against your obligations to the system, to society, all of that stuff. But equally, governments are much more focused on it, and the public is much more focused on it, and media. And that just means that it's there. And as we get more transparency, which we're clearly going to get, there will be more stuff about tax. So, it's a sort of good tagline, but I don't think it's realistic.
Just maybe switching a little bit now to you as Will Morris. So tell me about your other job. You're part-time priest at St. John's.
Yep.
I've read a Financial Times profile on you, as Howie Kinder wrote last summer, and it was indicated that you had a little bit of internal struggle in terms of, your day job as a tax advisor and your other job as a priest. Can you just talk a little bit more about that?
Sure. So, let me say a couple of things just by way of introduction. The first is that in my secular job, I am very clear that it's a secular job. It's not that, my faith is incredibly important to me, obviously, and that's part of who I am. But to me, the secular world, the secular job has to work on a secular basis. And I am very careful, I hope I'm very careful, I'm not sure I always succeed, but I am very careful when talking about tax, when talking to colleagues, to clients, never to appear that I'm doing that, with sort of religious finger wagging or preaching or being pious or anything like that. That simply doesn't work. And so I think that's a really important thing to say up front. This is, I'm not coming into that context. Another obvious point, however, I think, is that in any job, there are going to be areas of ambiguity. In any job, there are decisions which have to be made. There are choices which have to be made. There are going to be people who see things in different ways. And, some of those things are going to be challenging. You can look at a transaction and, we have secular structures inside the firm to judge, should we support this transaction or that transaction? We have a tax code of conduct. We apply that to these types of transactions. And, that's not to say that they're good or bad or right or wrong or anything like that, but different people will take different views on that. But that's life. That is the whole of life. Life is about, making these decisions. Life is about relating to people. And I think that one of the dangers, at least one of the dangers for clergy, is to imagine yourself in a position where, you're good and the other people are bad. And one of the things that I've always found hugely helpful, really affirming in a sense, is that actually, I'm in the place that everybody else is in. I'm in the place where everybody in the congregation is who works, and even those who don't work. That that there are times when you may not feel completely comfortable. There are times when you may not feel totally comfortable with yourself, and yet that's in the essence of being a human being. It's working that out. And I'll be careful again about how I say this, but I do think, as I've said before, that the business and the workplace, at least before the pandemic, you would be with people 40 hours a week. You'd spend 2 hours a week with them in church, maybe. You maybe go out for dinner with friends for 2 hours. What are the group of human beings that you interact with the most? It's the people that you work with. And again, this is not to preach or proselytize or anything like that, but actually just to be with them as human beings, to, the things that you find out about their families, what hurts them, what helps them. What an opportunity is there in the workplace just to make things a little better. And again, this is not about blinding white lights or saving the world or anything like that. It's actually just about making it a little bit better. And that in part is why I like meeting people in person, because you establish more of that relationship. So, I think that I do believe that religion can be a positive force for good. I have absolutely no doubt. Based on so much of what we see around us, it can be a really divisive force as well, which saddens me. But it's incredibly important to me. But I do not, to use the old phrase, when I come to a tricky question, I don't say, well, what would Jesus do? No, okay, it's a secular job. I do it in a secular way. I try and do it according to, rules of ethics and, a personal approach to it, which say, okay, let's do all the balancing here. But again, that's the way it should be, I think.
I appreciate that answer. I know it's not a very easy question. What are you most proud of accomplishing during your time as chair?
Firstly, just keeping the thing going. I think probably what I'm most proud of, this is not me. I mean, everything is a team effort, to be very clear. But what I'm most proud of is that both through BEPS and through this project, that we have managed to maintain a remarkable level of consensus, which we've expressed in letters, but also, internally on calls. And I would not have guessed at the beginning of BEPS, and I certainly wouldn't have guessed as this project has progressed, that we'd be able to maintain that level of consensus. But we have, and it's by listening to everybody's point of view and trying to find something which works for everybody. And, there are things in here which, under different circumstances, could have set people at each other's throats. I mean, there are, within the business community, huge winners and losers. It's not just amongst countries. There are huge winners and losers in this. And that could have gotten very ugly. But it hasn't. And, I'm really grateful for that. So, yeah, I guess BIAC should be proud of that.
And on the other side, any regrets?
A little more quiet time would have been nice. It has been desperately exciting. No, not really. I mean, I wish there hadn't been a pandemic for all sorts of reasons, and this is one of them. And, I wish there had been more opportunity on this project for us without a pandemic to interact more so that, we could have all worked together more closely. But, we are where we are. And, I think under the circumstances, it wasn't so bad. And now I hope it'll get better.
What advice would you give to Alan as your successor? And what advice would you give to businesses that are facing down the barrel of, these new rules?
So what advice would I go to? I would give no advice to Alan. He's a great guy. He will do this very well, and he'll do it I hope he'll do it in a different way. And I look forward to helping him and to seeing him progress. And there obviously is a big thing coming up. I think probably the next big thing is going to be ESG, and I think Alan will take charge of that and move it forward. What advice would I give to businesses? The piece of advice I always give, which is, however much this annoys you, and I understand it does annoy some of you quite a lot, stay involved. Stay involved, because something is going to happen here. And, with Pillar 1, it may take a long time for Pillar 1 to be ratified. But at the same time, tax authorities in some countries, maybe in many countries, will adopt bits and pieces of this. The Amount A sends a signal to some tax authorities about the arm's length standard and the fact that it's viewed as not working in some cases. It also sends a message about the nexus rules and, sort of the lowering of those thresholds. So, I think stay involved on the Pillar 1 side to try and make the explanation around that, the procedures, the processes, as good as they can be, even if it takes a long time. On Pillar 2, essentially the same advice, which is, for heaven's sakes, get involved in this. Explain, how these rules are going to impact you, how they can be made to work, not why they don't work or why they shouldn't work or why you made a stupid policy call or anything like that. How can you make them work? And bring your practical and technical expertise to the table and offer it, but offer it in the sense of providing a solution. I think that's really important.
One last question,
Sure.
A fun one. Which actor would play you in a movie about the BEPS project and about this project that we're dealing with now?
Well, let me be very clear. I'm not the director of the CTPA, so it wouldn't be George Clooney. I think it would probably be some rather goofy British comedian.
I'll nominate Colin Firth for this.
Oh, well, that's very kind of you. I'll certainly take Colin Firth.
Well, thanks again, Will. I really appreciate you stopping by, and it's so good to see you in person.
Yep.
My first in-person interview since this pandemic started.
Well,
so
thank you very much,
it.
Stephanie, and thanks to Tax Analyst as well.
And now, coming attractions. Each week we highlight new and interesting commentary in our magazines. Joining me now is Acquisitions and Engagement Editor-in-Chief Paige Jones. Paige, what will you have for us?
Thanks, Dave. This week in Tax Notes Federal, Patrick Dreesen considers how baseline inequality forecasts framed the 2021 tax debates. Thomas Horst examines BEAT's effects on U.S. federal tax revenue. In Tax Notes State, Nathaniel Bessie and Jamie Saul highlight contrasting post-Wayfair approaches among states with complicated local tax systems. Nikki Dobey presents her top 10 state and local tax policy issues from 2021. In Tax Notes International, Nana Amasarfo looks at expected tax transparency developments in 2022. Jose Suarez and Alejandra Flores consider Spain's new measures for startup businesses that offer tax incentives to attract investors and workers. In Featured Analysis, Joe Thorndike recounts the history of tax ferrets and argues that paying private tax collectors with a bounty system is a good way to ensure that the relationship between taxpayers and the state becomes as toxic and hostile as possible. And finally, on the opinions page, the commentary editors of Tax Notes share the topics they hope to see covered this winter, including cryptocurrency, environmental taxation, and the Build Back Better Act.
That's it for this week. You can follow me online at TaxStew, that's STEW, and be sure to follow at Tax Notes for all things tax. If you have any comments, questions, or suggestions for a future episode, you can email us at podcast@taxanalyst.org. And as always, if you like what we're doing here, please leave a rating or review wherever you download this podcast. We'll be back next week with another episode of Tax Notes Talk.
Tax Notes Talk is a production of Tax Notes. You can learn more about us by visiting www.taxnotes.com/podcast. When major media wants the straight story, they turn to Tax Notes. Thank you for listening, and join us again for another edition of Tax Notes Talk.
Want to see more like this? Subscribe for more tax videos. Special thanks to our executive producers Jasper Smith and Paige Jones, as well as showrunner and audio engineer Jordan Parrish.